Hi guys, welcome back to my channel. In this video we're going to be showing you how to use Sech signals the right way and how to stay profitable, protect your account. In Sech we like to protect our reputation by protecting our subscribers' capital. So we've come up with strategies that can be used to protect your capital, risk management principles that you have to adhere to for your capital to be protected. Because you see, in forex trading, it's all about risk. In fact, it's 50-50. 50% is risk, 50% is your technical know-how. You might know how to analyze and trade, but if your risk is not well managed, it's going to pay less. So we're going to guide you on how to use our signals. Now, on our channel, we have this is our VIP channel. This is where we send out our signals to our VIP subscribers. Here you get quality signals, you get consistent profit, we give you reliable services, and we have a classic customer service support team. So you have nothing to worry about. Just if you have any issue, just send us an email or contact us on any of our social media platforms and we'll respond to you ASAP. Now in the channel proper, we have several groups. We have a group where we send out information. In this group, we give you general information, updates. As you can see, is where we updated our YouTube. We have a new YouTube channel, yada yada yada. We guided you on how to use pictorial signals just in case we send a signal in form of a picture. Right, you'll find that in the VIP. It's like an information bank, our social media platform, our preferred broker, and all of that. Now we have a cryptocurrency group where we send out only cryptocurrency signals. Right, where we send out only cryptocurrency signals. We also have same for currency pairs. As you can see, we have this is for currency pairs. We send out only currency pairs into this group. And we also have a group for indices. Now our indices, we haven't started sending signals to that yet, but once we do, it will be updated in the group as well. Now every VIP member has access to all our groups. Now one of the most important things you must know is our risk management principle per account. Now we have several accounts we deal with. Now once you've gained access into the VIP channel, there are 4 categories of account types. Our members are placed into 4 categories of account types. One is those who are trading accounts less than $300, right? The next is those trading accounts within $300 and $1,000, and then next $1,000 to $4,999, and then $5,000 plus. Alright, so this is my notepad. On our $300 account users, less than $300, you are advised strongly to use 3% risk per trade. Then for those trading $300 to $1,000, these are the guys who are trading. We advise them to use a prop firm account. Now on the prop firm account, you're strongly advised to trade 0.25% risk. So 0.25% risk per trade. It's very, 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 very important because most prop firm accounts, you have a maximum daily drawdown of 6% per day. In other words, you can't lose more than 6% in a day of your equity, not even your balance. Your balance could be static, but your equity is moving, so you mustn't have a drawdown of over 6% and a maximum of 12. Some have 5% per day and different maximum drawdowns for it. Yeah, different maximum drawdowns cumulative. Right now, if you have, so for you to trade under that kind of condition successfully, you have to pay very heavy attention to your risk. So for our Profem users, it's important, it's mandatory that you use 0.25% per trade. It's mandatory you use 0.25% per trade. You get this way, it will take you several trades, about 30 trades or so, for you to hit that, which is impossible for SechFX to lose 30 trades in a row. It's very impossible, or even 10. It's impossible. Okay, so that's for our Profem account traders. We're going to guide you on how to calculate this risk. Then the next we have is the $1,000 guys to 4999. Now these guys are the ones who are trading they're usually moved to, most those ones who won't want to trade by themselves would use the signals, but majority of them will move them to our copy trading platform. Right, these ones are advised to trade 5% risks per trade. Now this is why with the 5%, why it's as high as 5%. With 5%, you can take two take profit levels. You can have two take profit levels, and our signals provide two take profit levels. The first take profit level will move break even, move stop loss to break even, close that in percentage, and then allow the rest to run. If your trade doesn't allow you to take two profits, you're going to be short circuiting the potential of this signal. Alright, so when we are making $100, for instance, or let's say we are making 3% profit. Right, let's assume we're using 1% for 1% risks per trade, so now make 3%. Right, you are only making 1%, while every other person is making 3% and above. You get, and when you have losses, it's going to take out that profit you've made. It's just going to be a mess. You'll mess up the signal, and we do not want that. Remember we said we have classic customer support service, so we want to give you the best experience, the best trading experience possible with our signal. So it's important to use 5%, right? And then on the less than $300, why is 3%? Is because it's a cent account. So for a cent account, you can risk, it's converted to cents, right? So for your $10, it's converted to 1,000 cents. For your $20, it's converted to, you get it right. For your $300, it's going to be converted to 30,000 cents. You get it, so you can comfortably use 3%. Now the big guys are the $5,000 and above. So for these guys, they can use 3%. They actually can use 1 to 3% risks per trade. Right, 1 to 3% risks per trade. Now, so this is very vital. You're expected to stick to this. How do you receive your signals? We send you signals through the VIP channel on Telegram. So let's say we've sent this signal, for instance, sell USD JPY, right? Sell USD JPY. What do you do next? You need to calculate your risk first before placing the trade. For no reason should you place a trade before calculating your risk. you need to calculate your risks first. How do you calculate? This is the platform we like to use to calculate our risks for. It's a free site. Thanks to them, CBFX. Shout out to CBFX. It's a free site. They allow us to calculate our risks here, and we've been using it for forever now. So all you need to do is come here. The link is also going to be in the mail response we'll give to you. You click it, it brings you here. On the instrument, you put the instrument you want to trade, USDJPY. Once it's out, you click it. Now you put, if you're already an experienced trader, you know how to calculate your pips on TradingView. You could easily click this settings right there and click switch to stop loss. So it will switch you to stop loss. You can put your stop loss here. Alright, you can put your stop loss at that level. Good. But if you do not know how to calculate your stop loss easily, just leave it on the stop loss price so that you can use the price. So you go to the open price. Our open price on the trade was 149468. 149468. Come back here and put 149468. 149.468. Then you come back to the stop loss. Our stop loss is 150857. 150857. Good. Then your account balance is in cents. For those doing the 300, less than $300, your account balance will be in cents. You just put the account balance there. It's going to be either 1,000, right, or whatever it is. Let's assume it's 1,000 because that's actually the minimum you'll be able to trade in a cent account. And we said 3%, so 3%, you put your 3% there, right? 3% risk. USD JPY price, leave it like that, don't change it. Contract size. Now this is very important. If you're using our preferred broker, you can leave that like that. You have to know the contract size of this pair you're trading. How do you find it? You have to go to your MetaTrader 4 app. So this is the MetaTrader 4 app. You come here and on this first icon, you click it and you search for the currency you want to trade. This is the cryptocurrency account, right? Okay, yeah. So this is one of our cryptocurrency accounts. It's already trading. The trades you just saw are live trades on the cryptocurrency signal group. Okay, so if you search through, we're not going to see USDJPY here because we are not trading currencies on this account. So you now have to add it. You click the plus button and just type USDJPY. And then you click it, right, depending on what you have, and then you go back to the instruments and look for it. Now you see it down here at the bottom, so you click it and click symbol properties. It shows you the what is it called, the contract size. Alright guys, that's the contract size. This is the contract size. It shows you the contract size, and what do we say there? That's 100,000. So you can now take it back to the site to confirm it's the same thing. Now you can see it's 100,000 we have here, so you don't need to change it. All you need to do, just click calculate, and it automatically calculates your lot size, unit trade size, and the money at risk. So you know now the lot size you should use for this trade is 0.03 lot size. You go back to your trading app, MetaTrader 4, just open it and then click new order, and then adjust, make sure it's a market execution, adjust it to 0.03. Alright, USDJPY 0.03, and you click your buy or a sell depending on the direction on the VIP channel. Then afterwards, you can then impute your stop loss and take profit levels, or you could impute your stop loss and take profit levels as advised on the VIP. Now let's assume we are trading the second category, the $1,000 to the $300 to $1,000 account. That's the Profem account, right? So we advise for you to use 0.25, strictly 0.25. Now Same parameters, USD JPY, currency US dollar, open price same, stop loss same, account balance, let's say it's a $5,000 account. You're not trading 3%, you're trading 0.25%. all right, you confirm the contract size if it's same, and then you click calculate. Now for prop firm account, we strictly also advise you stick to only cryptocurrency trades. Do not place any other trade on your prop firm account. This is the reason, because of the risk. The risks, the lot size, it will take you to trade to take profits on a currency pair with your prop firm account is going to be higher. So it's best to stick to cryptocurrency, and because it's higher, your statistics is going to be inconsistent. So you're going to have situations where if you make a loss, you have let's say $20 loss, or let's assume you should be making $20 loss consistently if you're making a loss, and the profit is dependent on the reward to risk ratio, right? You then use your prop firm accounts to calculate to trade currency. So what you're going to have is sometimes you're not going to be able to trade $20 loss. You're going to have to increase the loss to 30, 35. There's going to be an inconsistency. Okay, and that's not good for your account. That's not good for your progress. Let me quickly show you what I mean. USD. Okay, let's see if we can have that on this. Let's say $5,000 prop firm account, 0.25. all right, and every other thing remains the same, and click calculate. Let's see what lot size that will give us. Bam. So see, this only gives us 0.01, and we are risking 12. So if you want to place two trades, you're going to have to place, if you want to place two trades, you're going to have to place 0.02, and doing that, you're doubling your risk from this $12 it's in to about $20 within $24. All right, you see it. So that's a different, in other words, you're no longer trading 0.25%, you're now trading more than 0.25. Very important, very, very important. But let's see, okay, I'm going to show you what to do with the prop firm account, how to calculate the cryptocurrency just shortly. Now let's move to the next account. Let's say the next account is what again? $1,000 to 499. Okay, so same parameter. I'll change it to a $1,000 now, and for these guys, we said they should risk 5% because it's not a cent account, it's an actual dollar account. So with the 5%, same parameter, you can then trade 0.05. You see it. So if we say take profit one has been hit, close some profits and move stop loss to break even, you can reduce your stop loss on the running trade and lock some profits. You get it, right? Yeah. And same thing for the $5,000 account, guys. Now let's look at cryptocurrency signal, how to handle cryptocurrency signal. Okay guys, so for the cryptocurrency signal, let's show you how to calculate your risk. Okay, this is the recent one. Let's work with DOT USD. Right, so that signal has come, you've received it. What do you do first? Calculate your risk. How do you calculate your risk? Now we use a different free site as well. It will be included in your mail. Let's go there. Okay, so this is the site, guys. Shout out to Trade Crypto. So they allow us to use this site for free to calculate risk, okay, for cryptocurrencies. Now let's say you want to trade for the cent account. You might not be able to trade cryptocurrency on your cent account. Your broker might not allow you to do that. You might just only be able to trade currency pairs. But if they do, you follow this step. But we are going to let's work with a $1,000 account. If you are able to trade crypto on your cent account is also going to be converted to thousands of cents. You get the minimum of 1,000, so it's the same thing. So let's assume this is a $1,000 or a 1,000 cents. Okay, and for cent accounts, we say 3%. Alright, so let's assume you're working with 3%. It's already set. You put your account size, good. Your risks, you can click and move this. So you're risking 3%. You see 3%. It automatically tells you the risk amount. You can edit this. Then your entry price, you can edit your entry price here. You go and get it on the signal group. Here you can see this, take the entry price and the stop loss, 433 and 401. Okay, it's been imputed already, 433, 401. Then it automatically calculates your position size in tokens. Now this position size in tokens, that's your lot size. That's your expected lot size. But if you're trading a $1,000 account, you're risking 3% on this trade. Ideally, if you go to we need to know the symbol, the contract size for your symbol. The contract size, very important. On the currency pair, we could easily just impute it here, but for this we're going to have to calculate it manually. It's very simple. So firstly, confirm your contract size. Okay, so this is a trading app. Let's go to DOT USD. Okay, bam, that's it. There you click it, symbol properties, and you identify the contract size. If the contract size is 1, now very important, listen, if the contract size is 1, in fact the contract position size token on the risk calculator sites we use, divided by your contract size. That's how you get your lot size. This is what I mean. The contract size is 250. So this site now is telling us we should trade 93.76, 93.7644, blah 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 blah. So what you're going to do is divide 93. Let me quickly pull up my calculator. You're going to do 93.76 divided by the contract size, which is 250. Now this automatically gives us our lot size. So the lot size we should be trading is 0.37. Don't approximate. Don't approximate. The reason you shouldn't approximate is if you're in loss, let's assume 0.37 is going to give you $20 loss, assuming. If you approximate it, it's going to increase your loss. Right? That's simple math. To increase your loss. Right? It also increases your profit, but risk management is more important. If your risk management and strategy is intact, your profit will follow. Alright, so 0.37, that's the lot size you should be using. So now you come back to this, you click it and click new order, put the 0.37, you get it, and then you click your buy or your sell. Remember to put your stop loss and take profit as advised on the signal. Click your buy and or your sell, and the trade is open. What you're now risking is 3%. Right? You want to risk, let's assume same parameters, but you just want to adjust the risk. Let's say it's you want to adjust the risk to 5%. Right? You can adjust the risk to 5%. Same account balance for those trading with $1,000 and 499. Same parameter, it calculates it for you. So the lot size has increased here. So all you need to do is just divide 156.35 by 250. 156.35 divided by 250, and you get your lot size 0.62. That's your lot size for that 5% risk trade. If it's a $5,000 account, for instance, let's assume the prop firm guys, those trading with prop firm accounts. Very important. All right, I said I was going to do that for you, so let's show you that. So your prop firm account is a $5,000 account, and you're advised strongly to use 0.25%. so what you do is reduce this to 0.25. now it can't go below 0.5, so it's very simple. It's simple. We work with 0.5 on this side. Whatever we get, we divide by 2 to give us 0.25. Right? Simple. So $5,000 account, 0.5 would impute our entry price, impute our stop loss, and then bam, we get our position size in token. So position size now should be 78.06. Now remember, we used 0.5, so 78.06, we're going to have to divide it by 2. 78.06 divided by 2. But this is what we should be risking. This should be our lot size. But the final thing, remember, always divide by the contract size. The contract size, if you remember, was 250 for this particular cryptocurrency. 250. This particular cryptocurrency. To your calculator and divide by 250. It gives you your ideal lot size, 0.15. So when you play 0.15 on $5,000 accounts, you're risking 0.25%. Now, it's important to note that 25 is not always the contract size. Cryptocurrency has its own contract size. So that one is 2,500. Atom 250. Let's look at Bitcoin. What does Bitcoin have? 1. So whatever you get on Bitcoin, you don't have to, you just divide by 1. It's the same thing. And Bitcoin Cash 10. You see they differ, so you don't use 250 as everything. What other cryptocurrency do you like? Okay, we know of Uniswap. Okay, Uniswap is 250 as well. You get it, guys. So this is very important. Very important. First, you receive the signal. Second, you calculate it based on the structure of your account. Please do not forget. Over a period of time, you get used to it. This is the way to stay profitable and consistent with the strategy, with the signal. Alright, guys. If you have any questions, don't hesitate to ask us. You can always reach us. You have an exclusive access to us now. Please reach us at any platform you want to use. Send us a mail, social media, any platform. You could also chat us up on Telegram. We'll respond to you quickly. If you need us to explain anything further, please reach out to us. And on this note, we would like to wish you guys a beautiful journey with Sech FX.